Hello, everyone, and welcome to Trading Today. I'm going to show you how to set up Zerodah's Kite for moving averages. Okay, we're going to look at how to set up Zerodah for moving averages. I'm going to take as an example. Uh, Here is my screen with my Kite site here, and you'll see right up on the top apps, funds, positions, holdings, orders, dashboard, all of that up on top. But on the left side, you have the watch list. Okay, and with the watch list, I'm going to take one of those. For example, yeah, let's take SBIN. Okay, SBI. All right, click there. And I'm going to open the full chart. This right here on the left will open up the chart on this right side, but I want the full chart or the chart for the full page. If you click here, it will open up the chart for the full page. Here it is on this side. Okay, so I want the entire page for one chart. Here it is. This is State Bank of India, SBI. It's their chart. And each of these candles represent one day of prices, okay? The price movements of one day, each of these candles. How do I know it's one day? Because right here up on top, we have a selection and I have selected one day. I can look for 1 hour chart. And if I make the 1 hour chart, then each of these candles represent a price movement of 1 hour. But for our purposes, I'm doing what is called short-term trading or swing trading. And for this, I'm going to use the 1 day chart. So each of these candles represents one day of prices. Now, a moving average is when you take the prices for the last so many days, a set number of days, and take the average. Like, for example, this was the last day of trading, which was Friday. And if I'm looking at a 20-day moving average, I would I would just count back. I would take the closing price of each day and go all the way to like about 20 days, all the closing prices, and I would take the average. In other words, I would multiply by 20. I'm sorry, I would add all of it together, all the prices together, and then divide by 20, and that would give me my 20-day price movement average or 20-day moving average. In the same way, you can take 60 days moving average, 100 days moving average like that. So if it's a 60-day moving average, you would take prices of 60 days, the closing prices of the last 60 days, all right, and add them together and divide by 60, you get the average of the last 60 days. So each day that is done with the previous 60 days, and that's how you get the 60-day moving average. All right. Now, how do you set up the Zerodah to do this? See, right now, this is already set up. See, this red line is a 60 EMA, 60 moving average, 60-day moving average is the red line. And then here is the 20-day moving average, the blue line. In other words, this red line shows that in the last 60 days, this was the average of the prices. The blue line shows that in the last 60 days, according to each day, it was the 20-day moving average of the last 20 days, the blue line. All right. How do we set this up? I'm going to go to studies and I'm going to press clear all to get rid of what we already have set up. So now we have a clear, this is what your screen probably looks like right now. So I'm going to click on studies and I'm going to search for moving average. Okay, here it is, moving average. And I've selected one. Here it is. So it is giving a 50 period. I'm going to change that to 60 because that's what I want. And the field is the close. I want the closing price of each day. And the type, I'm going to change from simple to exponential. What that means is that 60-day moving average would be take the closing price of the last 60 days, total it up, and divide by 60. But this one does the same thing, except the last few days, the price changes, the price movements are given more value. That's why it's called exponential. All right. Offset, you can leave it like that. And then here you can change the color that you want. I'm going to leave it at red. All right, so I press done. Here it is. So here is the 60-day moving average. So each of the days, you will see the average price of the last 60 days from that day to the previous 60 days, this day to the previous 60 days, and even the last Friday, you take the previous 60 days. Here is the price range. Okay, now what else do we want? We also want, I'm going back to studies and press moving average one more time. This time, I want the 20-day moving average. So instead of 50 for the period, I'm going to select 20. And the field, I'll leave it as closed because I want the closing price. And the type, I want the exponential, not the simple exponential, because the exponential gives more value to the more recent price changes. Okay, offset, I'll leave it at 0. And the MA or the moving average, I can change the colors here. I'm going to take like a blue color, all right, just to differentiate that. And that's it. And I'm done. So here is the 20-day moving average represented by the blue and the 60-day moving average represented by the red. So how do we analyze each of the price movement of the stocks? Well, when the 20-day moving average is above the 60-day moving average, that means that the price of this stock is on an uptrend. It is moving up. The trend is up. Remember, there are three types of trends, right? There's an uptrend, downtrend, and a sideways trend. And see right here, if you notice this right there is actually a downtrend because what you have is the prices are going down gradually, okay? But then you'll have some times like this where it's a sideways trend. See, for several days, the price has been sideways, not really moving up or down very much. Okay, I'm going to go back and look at the history of the moving averages. See, all of this time, the 20-day moving average has been above the 60-day moving average, indicating that the price of this stock is on or has been on an uptrend. That's SBI, State Bank of India. Look at where this crossed over. Look at that. See, November 3rd, 2020. So we're looking at what is it, 4, 5, 6 months. 6 months it has been on an uptrend. Now, should you stay with that stock for 6 months? Well, look at the price change 196 rupees, and look at what the price was on the last day. Um, 336, 196 to 336. Okay, that is more than 50%. Okay, that's about, I don't know, maybe 60 to 70% change in price, rise in price. Now, 50 to 60% in 6 months, that's wonderful. Okay. I mean, I'm not sure where else you're going to get that. Okay. So you can stay with a stock like this as long as the stock is on an uptrend. Now, periodically, it will look like it's going down. Look at the price. In sometimes it looks like, see, we had several days that the price went down, 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 right? And then you stay with the stock and then it came back up again. Okay, here again, the price has gone down. Stay with it. Price has gone down during this week or more than a week. Price is going down. And look at this whole trend. It's still going down. It's been from February onwards, it's been on a downtrend. See, consistently on a downtrend. So I'm actually in this stock right now and I'm waiting to see what happens in the next few days. If it's going to cross below the 60-day moving average, I'm selling and getting out. Okay. But if not, I'm going to stay with it and see how long. If it moves up again, I'll see how long. See, look at the last 2 days. The price has been up. Not just the 2 days, but several days we've had an uptrend, and it's possible that this average can move up again. And if it does, I'll stay with it. If it doesn't, and the 20-day moving average crosses below the 60, I will sell and get out. Okay. And let's look at another stock as an example. Federal Bank. Here's another example. And I'll open up the chart for Federal Bank. All right. No particular reason I've selected banks. All right. Here, you'll see this last week, the price for Federal Bank, the 20-day moving average went below the 60-day moving average. Okay. There were a few people that had entered right before this and they asked me what to do, I said, if it goes below, just get out. So this will be the time to sell and get out. Don't stay there any longer, okay? Because you don't know how long this downtrend will last. Now, if it begins to move up again, yes, you can stay there. But look at the history there. Look at this history. The up move actually began around November again. Here it is, beginning of November, November 4th, 5th, okay, around that time. The price was 52 rupees at that time. And from there, let's say that you get out while it's crossing below. See, it is 77 rupees. Okay. So it's still about like about 45% increase. 45% increase in about the last 6 months. See, it's great. It's a great price movement. So what you do is look for stocks. All right, look, make a watch list of stocks and look for stocks that are just moving, that where the 20-day moving average is just crossing above the 60-day moving average, and buy soon after that. Okay, soon after it crosses, get into it and then stick with it. Now, once in a while, you'll have a false breakout. Like, see, it went up and then it went down again. So if it does that, you may have to get out. See, here again, it went up, right? And then it went down and stayed down for a while. So it could fool you once in a while, but then you'll still get quite a movement from this type of analysis. All right. So this is one thing that I wanted to show you how to do this, how to set up the 60-day moving average and the 20-day moving average. This is a very simple way of how to select stocks for trading. Okay, get in on it and stay with it for the entire trend while it is trending up. Now, for some people, they may not want to wait that long. So what they would do is they would just get out once they've gained 5% or 10%. You can do that as well. Okay. But to me, it's like, why? Why bother? Just stay with it and get the full benefit. And you can probably buy two or three different companies like this and several shares of each one and stay with it. Now, if you have more capital, then you can buy a few more. But still, I would not recommend buying more than four or five. And once you're more experienced with it, maybe you can go up to 10 different stocks. But more than that, it will be too much to handle, too much to evaluate all of it. All right. So I just want to share this with you, and I believe it will be beneficial to you. So you have a good day, and thank you for watching this video. And if you found this video to be helpful to you, please like it and share it. And if you have questions or doubts, put it on the comment below, and I will do my best to answer your questions for you. All right. Thank you. Have a great day.